Here is the technical analysis of Dow Jones Index for the week 26th April 2021. This is the weekly chart and these are the weekly candles. On this weekly chart, it can be clearly seen that after four bullish candles, this bearish candle, it was formed for the week of 19th April 2021. And this bearish candle, it is a hammer. It is a bearish hammer. Bearish hammer often indicates a reversal in the market. So here you can see that this bearish hammer, as I told you last week and also last week, that the market is soon going to show the signs of weakness and then market is going to fall. So here, because market was supposed to hold here on this particular resistance, but market crossed the resistance with a bullish force, and then for the next week it formed a bullish candle. However, it failed to breach this critical resistance. This is the extremely critical resistance, which is around 34,400, or you can say 34,350. Thus, through candles, we can clearly see that because of this hammer pattern and because of this a long bullish rally, now we are expecting the market to fall. And it looks like that the market, it already gave signals that market is coming into the correction. And this week, that is starting from 26th April 2021, we can further see a little more correction in the market, and then finally market will follow its bearish trend. Now if we talk about the moving averages, then the nearest moving average, which is alma, the nearest moving average is at 31,500, whereas the market is at 34,000. So there is a gap of 2,500 points in the market, which means there is clearly a deviation of 2,500 points from its nearest moving average, which is ALMA. And if we talk about the other moving averages, which is WMA and the exponential moving average, then here on this exponential moving average, we can clearly see that it is around 29,800, it's around 30,000, whereas the market is at 34,000. The market is at 34,000 and the exponential moving average is at 30,000. So there is a deviation of more than 4,000 points, more than 4,000 points, which again is clearly indicating a fall in the market or a need of or a need for the correction in the market. So this correction is required and it is the need of the market. Without correction, the market is not expecting to move up any further. The market has moved up quite a bit and now the market must come into the correction, a healthy correction of around 3,000, at least 3,000 points, from 34,000 to 31,000, or at max 30,000. So the market must come into the correction, into a healthy correction, so that after a couple of weeks or after a month or 2 months, it can then again follow its bullish trend. So this is how the stock market works. Now, if we talk about the other indicator, Ichimoku, so Ichimoku, it is quite far and market is not expected to hit Ichimoku at least by June, because April is about to end, and then May, and then so yep. So May, last week the market may try to hit the Ichimoku, else it will be June probably, when the market will when the market will close below these moving averages, and then the market will hit the Ichimoku. If we talk about the support and resistances, so support and resistances are the same that we have discussed last week and last to last week. This is the critical resistance here around 34,400, and then once the market gets into the correction, then it will find a support here. This is not a critical support, but this is the base support. This support is at 33,500. Then the next support lies here, which is around 32,600 or 32,500. And thereafter the next support is here, 31,500. So this support is considered critical. So this is 31,500. This is the critical support. The reason is that once number one, that there is this confluence zone. Number two, that the moving average is here, and by the time the market comes into the correction, this WMA, it will also hit this particular support. So there will be multiple factors which will be providing a support to the market here around 31,500. So if you have shorted or if you have bought the put, then your target could be somewhere around here, 31,500. And the expiry you can take June 2021 or July 2021. So that will be good, and you'll be able to make some good money. Now, if we talk about the other indicators, here we have stock RSI. Stock RSI is extremely bullish. It is extremely bullish. But last week it was like the stock RSI was around 100, but this week the stock RSI it fall to 97. So it has shown some weakness in the market, but not that much. But again, the indicator stock RSI is indicating that the market is extremely bullish. Now, if we talk about the MACD, it is clear. It is extremely clear that the market is very bullish. And if we talk about the momentum in the market, then yes, the market has gained some momentum. So, considering all of these technical indicators and again the deviation from its moving average, and then its behavior here in two extremely critical resistances, it is expected that the market will leave its bullish trend and it will come into the correction, because it has already shown the sign of weakness here. Then now the market is expected to come into the correction this particular week, and in this week we can see some very clear signs of this correction. So this was a technical analysis on the weekly charts. Now let's move on to the daily charts. Now we are here on the daily chart, and these are the daily candles. If you see that the market from 19th April until 23rd April, for these 5 days, the market was indecisive in this week on these 5 days. One day it came down, heavily. Then the other day it went up, and then the other day it came down heavily, and then the last day it formed this bullish candle. So this was up down, this kind of thing. So here the market has clearly shown the signs of weakness. It was a clear bullish trend, but now the market has shown the signs of weakness, which means market is coming down. Seeing these candles, it is very clear that the market is coming down, and it's been almost a month. It's been almost a month since the market has touched or respected its moving average. So it's time for the market to come down, to come into the correction, and to respect all of these moving averages, or at least ALMA and WMA, and then only we can predict the bullish or the bearish trend. But it will take at least a week or 2 weeks before we come into any conclusion. Now, if we talk about the technical indicators here on this chart, then we have these moving averages, and the moving averages are clearly it's a fan out. Fan out always supports the bearish or the bullish trend, but in this case it is supporting the bullish trend. However, again, the deviation from its moving average and the respect that was required by these candles for these moving averages, it is not seen there. So here it is quite confirmed that the market is coming down, and market must come into the correction, into a healthy correction. It is required. It is this correction is the need of the time. The market must come into the correction, because if the market do not come into the correction, then clearly this market will form a bubble, and this bubble will not be good for the market or for the economy, which is why I am highly emphasizing that the market is coming into the correction, and this is the time, or that this is the need of the time, that the market must come into the correction. And all of these analysis, they are saying that yes, the market is expected to come into the correction. If we talk about the Chimoku, then Ichimoku lies here around this support, which is 32,500. So yes, the market may touch the Ichimoku, may hit the Ichimoku this week or the next week. That will be the first week of May. The market may hit the Ichimoku or this week, and then it will find some support here at 32,500, and once it close below this support and below the Ichimoku, then there will be a free fall until the next support, which is around 31,500. And if we talk about other indicators, then we have now here the stock RSI is clearly indicating a bearish trend. Stock RSI is saying that this market is expected to come into the correction. Stock RSI has clearly formed this pattern, which is again supporting the correction in the market. Then we have MACD. Again, the MACD has also formed a pattern which is supporting the stock RSI, and it is also supporting the correction in the market. So considering all of these factors, all of these technical indicators on the daily chart, it is expected that the market is going to fall, and it may fall anytime, okay, within a few hours to within a few days, and the market will come into the correction. So my advice here, on this Dow Jones index, is to stay bearish, okay. If you are holding any long positions, then my advice is to make sure that you have put a stop loss there, because whenever the market will retrace, then your stop loss will hit, and you will get the profit. But if you forget to place the stop loss, then chances are that you may end up losing some money in the market rather than making profits. Okay guys, so this was my technical analysis for Dow Jones Industrial Average Index for the week 26th April 2021. Should you have any questions or queries, you can write your comments in the comment section. Should you wish to participate in my profit booking programs, then I have given the links of these profit booking programs in the description of this video. You can take a look.